Oh, we were talking about taxes. So once you get your tax returns back and you have a good feel based on the new tax code, it would really be good to sit with your tax person. And I'm not talking about just somebody who does your tax returns, but a tax strategist. Okay? Because nothing wrong with a tax preparer. They do a great job. I wouldn't want to do it myself. And there are great programs that do it. But tax preparers are concerned about the now, the today. Like, you need to stuff enough money in your SEP IRA or max this out because you're going to save current taxes. But we're not worried about what your taxes might look like 20 years from now. In other words, what your distributions from IRAs are going to look like when you need to live off that money. And it creates a situation where you're short-sighted in your thinking and you're not thinking about when the time comes and you need the money to live, that you've done a lot of good stuff to lower your tax burden while you're working. But now that you're not working anymore, you're going to get hit with taxes, and it's going to be tough to tell you that taxes won't be higher then. And this is one of the reasons why. This year, Washington is going to spend about $35,148 per household and collect $26,677 per household in taxes, which is an $8,471 deficit. So that's going to bring the total national debt to $177,000 per household. So federal spending has soared nearly $7,000 per household since 2007 and rise another $7,000 over the next decade. And again, these are all they're adjusted for inflation. So unless you rein in spending, tax increases are going to result, right? And so where's the money go? Well, think about it. Well, Social Security, right? Entitlement benefits, because people are getting older. Listen, there's the Washington's going to spend this year on, first of all, Social Security, Medicare, $13,178. Again, you have the 15.3% payroll tax. That's between employer and employee. If you're self-employed, you're paying both. The typical couple retiring today, and this is why I tell you, Social Security is one of the best deals out there. And you're paying for it, but the typical couple retiring today is going to receive Social Security benefits 13% higher than their lifetime contributions, and Medicare benefits that are triple their lifetime contributions into the system, even adjusting for inflation and net present values. So in some ways, I get a little ticked off that that's going to happen. But as an advisor, I've got to help you make the decision to maximize those benefits, because if you're paying for them up front to some degree, I got to make sure you're getting them in when you need them the most. And 74 million retiring baby boomers are added to this system, and which means that payroll taxes are going to have to go up overall, right? Or sooner or later, taxes are going to go higher. And we also know that the current tax brackets, there are 7 now, are going to sunset in 2025. And most likely that could the odds are pretty good that is going to happen. So you have to do some retirement planning while you're still working to understand what taxes might look like when you retire and what the implications are going to be for your lifestyle and spending in retirement. So if you work with a tax strategist who's not just focused on what you're going to save today, which means that you're going to put more money into deferred accounts, right? Money that are what we call pre-tax, 401ks, SEP IRAs. If you have all your money in these accounts by the time you retire, guess what? You have no tax control whatsoever. In other words, everything you do is going to be taxed at what the ordinary income tax rate is. Not only that, it's going to result in taxation of Social Security and possibly surcharges or increases in your Medicare premiums. So you get it one way or another. So what you want to try to do is right at the start, say you're just starting to save, or say you're in your 30s and your 40s, you got to be looking at what we call diversification of accounts. And what I mean by that is you're going to have some money in brokerage accounts. You're going to have some money in Roth IRAs, or Roth 401k, which is going to be completely tax-free at retirement. So I have various buckets to draw from so I can manage my taxes and control what I'm able to do. So yesterday, I met with a wonderful client of mine, went back to work, and he said, I really would like to pay my house off. It's a low interest rate, but I owe $150,000 on my house, and I really would like to pay it off. If I had that money in a checking or brokerage account where maybe I have lower capital gains, or I have some money in my Roth, I might have been able to help him. But since it's all in IRAs, to take that money as a lump sum out of his IRA, his rollover IRA, would have been detrimental from a tax perspective. So we have to come up with a strategy to take it out over time. So in other words, we are letting the government and the tax code totally dictate our distributions in retirement because we've put all this money away pre-tax because we're going to save a little bit of money today. What you save today is going to hurt you tomorrow, especially if you think taxes are going higher. So if you work with a tax strategist, you can come up, and your financial partner, you can come up with a process of doing what we call surgical Roth conversions. In other words, moving money from traditional IRAs, if you have money outside your plans, and surgically, slowly moving money into Roth, staying within your tax bracket. Or if you're working for a company right now, the most popular thing that you're going to do is your 401k, right? Your traditional retirement plan, whatever that is. Ask your company about Roth 401k. Yes, you're going to pay a little more in taxes. If I take 10% of my salary, remember, pay yourself first is not a myth. It's a good thing. And I place that aside in my Roth IRA versus my traditional my Roth 401k versus my traditional 401k. I am going to owe more in taxes. In the current world, in the current situation, I probably will owe more in taxes. But I have the money to pay the taxes now because I am an income machine. I am a human capital investment. I am making more money. I have money coming into my household. When I'm retired, I have pretty much, if I'm not working, I have no money coming into my household outside of maybe Social Security, and if you're very lucky, a pension. So why wouldn't I want to have more spendable dollars away from taxes? I don't care if I'm even in the lowest tax bracket. And that's another myth, because when you retire, we're told you're going to be in a lower tax bracket. When I started in this business in 1988, I could say that was possibly true. Now I can't tell you that it's true at all, because it's not going to happen. You're not going to be in the lowest tax bracket. So your tax bracket will probably moderate a bit, but for the most part, it's going to be the same. So I'm going to owe more taxes on my retirement consumption dollars at a time when I'm not bringing money into my household. I'm not saying go full force, but I will tell you, I tell my daughter, I tell everybody in their 20s, whatever your broker, your advisor, your employer is telling you about putting money in a traditional 401k, I am going to tell you to do the opposite. I'm going to tell you to put it all into Roth. I think it's going to be very, very important. We always talk about diversification of assets. You must diversify your accounts and have different ways of collecting money, different buckets that are taxed in different methods to create the paycheck in retirement you want. Ooh, I feel like I'm on a soapbox. Can you buy me a soapbox, Brett? Hey, well, you're listening to the Lance Roberts Show, the Wednesday edition. We'll be back. We're going to talk about super savers. Stay tuned. You're going to really like this. You're listening to us on 700 KSEV, the voice of Texas.
It's the edge of the world and our Western civilization. The sun may rise in the east, at least it sets in a final location. It's understood that Hollywood sells Californication.
Want a longer talk with Lance about your money? Request a personal one-on-one at lancerobertshow.com.